And what's going on, guys? It's Gabe, and welcome to How to Trade, the safest option strategy so you don't blow up your account. The inspiration to this video is obviously members in my community at Trade 1348. Now, we've had a lot of members who absolutely killed it, but part of the evolutionary education that we provide is introducing them to concepts and strategies that minimize risk. And, well, they said, "This is so good, Gabe. Why don't you make a YouTube video out of it?" We are looking at NVIDIA. Now, before we get into the strategy, we need to show you the alerts. Now, with Trade 1348, we provide you the charts that give you all of the actionable information that you need about a stock. Currently, we're looking at NVIDIA, and you could see past performance. We have an actionable alert made here courtesy of our proprietary traffic light. And as you can see, these levels, all of these levels are automated just for you, so you don't have to rack your head on where your levels are. Our chart will automatically populate them for you. But the traffic light here is going to give you an actionable alert when it senses a shift in momentum, which then introduces you to the 1348 EMA trend channel. So it is front running you based on the sensitivity of the traffic light, but it gives you the most powerful actionable alerts, period. And you could go ahead and try for just $5. So let's get right into it. We're looking at NVIDIA. As you guys could see, traffic lights, very, very profitable. We have an alert here. Let's measure this alert. And we break through levels, and that is a $70 move over 39 trading days. All right, we could do the same here. We have a traffic light on the daily, and that is a $122 move in just 67 trading days at or about 3 months. Now, this is obviously on the daily for those who have day jobs. For those who are preoccupied, maybe own their own business, but want to dabble in trading, well, these alerts here will keep your fingers on the pulse and help you, again, to receive the most actionable trades. Along with that, we do provide a system that allows you to scrub against the market and get all of the daily traffic lights as the market closes. One of those traffic lights is actually AMD, and I'm going to find this for you, and then I'm going to show you how this is played. So this was Friday. I am looking for AMD cross down, and this is actually a play I'm personally in. We had a traffic light down 413 at 4:02 p.m. at the price of 92.08. Let this sink in. Currently, we're looking at AMD. We have the traffic light signal on the 13th, and we see that there is a move to the downside. AMD closing at 91.75. However, we did have a low just briefly touching a 90.50. Now, this looks to be in a downward trend on the daily. Its previous traffic light alerted and allowed for a $21 move in 14 trading days at or about 3 weeks. Now, these traffic lights are not 100% guaranteed. What is? However, we do provide, again, the levels and a stratagem utilizing the 13 to 48 and the 24 EMAs that show you optimal entries and exits to help you make a lot of money. Let's get right into the lesson here, because this is all about how you could minimize your exposure with your options. And in order to do that, you need to understand the concept of the sliding scale of risk. Now, let's say you have $10,000 in your portfolio, of which you're going to risk $1,000 in any one trade. A 25% return on $1,000 would be about $250. If we go ahead and say we are now going to risk only $500 in a trade on a $10,000 portfolio, that's only a 5% allocation. Now, in each trade, it is taught that once you've allocated to the trade, make sure you do not lose more than 1% of your port. Simple mathematics would say you have a $10,000 portfolio, you enter a trade with $1,000, that gives you a stop loss of 10%. Alternatively, if you entered with $500 on the trade, your stop loss is now 20%. But what if we removed all the mathematics and said simply enter with 1% of your port on the trade? But let's be clear, with 1%, you're not ignoring the rules of the game. You still would have to practice proper risk management. However, if you lost your whole position, that is just 1%. If you lost 10% of that position, that is just 0.1% of your port, allowing you to stay alive and play the trends and make more money. Now, we're going to focus on options. This also works with shares. You could either go long or you can go short, or in our case, we're buying calls or we're buying puts, okay? So let me explain this strategy out and how do we do it. Assuming we have a $10,000 port, a 10% allocation would be $1,000. However, a 1% allocation would only be $100, allowing you to manage your emotions and risk optimally. So let's go ahead and take a look here. AMD in a downtrend, so therefore we're biased to puts. Let's go and take a look at AMD's option or contract prices based on a strike that would fit our conditions for our portfolio. Now, this is April 28th. I do advise that you give yourself at least 2 weeks out or more, especially if you're playing the daily. For those who are playing on the 1 minute, the 3 minute, or the 5 minute time frame, give yourself 2 weeks. For those who are playing on the 4 hour or daily time frame, give yourself 30 days plus, or play the monthlies. In this example, we're going to assume that on Monday, we are going to play this on the 5 minute. The broader trend on AMD is in a downtrend. We see that both on the 4 hour and the daily. And this is really, really important when committing to these type of plays, especially in the long term, that you are aware of where the trend is by looking at larger time frames. The 1, the 3, and the 5 are not going to paint out that time frame for you. We've established that on Monday we will open a position with AMD as we see a signal to the downside on the 1, 3, and 5. We know that its current price is $91.75. So we're looking for puts here, and we could find that here on Yahoo Finance. I'll introduce you guys to 2 links that you could go ahead and monitor option prices and calculate profit. We'll get to that in a second. So what we're looking for are option prices that fit our condition. And what we have is the $86 strike here. I want you guys to understand something, that the further away from at the money or in the money, the lower your theta is. All right, I want you guys to do your research on that. Again, one more time, the further away you are from at the money or in the money, the lower your theta is. And time decay happens to be the biggest nemesis to day traders in their inability to know when to take profit or take profit optimally. Okay, so back to this. We've decided we are going to take the $86 strike with an expiration of April 28th. That contract's going to cost me $91. So now this is where we go into the options calculator here. And I'm also going to include this link in the description. So what we're going to do is get the price for AMD, current price. You could simply just type in a ticker. For instance, if we did NVIDIA, we would click get price. It would load everything up, right? What we're going to do is get the price for NVIDIA. Then we want to buy an option. And then we want to select an option. And if you remember, we're going April 28th here. April 28th, we're looking at the $86 strike. At the current moment, it is 89 cents. We are going to click this, and we're simply going to buy one contract. Remember, we're sizing for zero, and we're making sure that we do not expose our accounts to unnecessary risk. This is the number one reason why beginner day traders end up blowing their account. Improper risk management and overexposed to risk, meaning they are trading with a size that is too big for their portfolio to handle. And I would blame Wall Street bets for that. You got guys who are YOLOing 100,000, waiting for that major payday. And guys, that is unsustainable, absolutely unsustainable. You might get lucky for a year, but over time, you will go broke. So, looking at our calculator here, we have one contract. If you want to assume a little more risk, we buy two contracts. And the total cost would be $1.78, meaning we're risking 1.78% of our portfolio. So, as we look at it here, we have our expiration listed here, and you can see basically your profit zones. In this example, if we bought on Friday, which we're not, we intend to be buying on Monday. So that would be right here, right? Let's just say Monday. And on Monday, she moves down to 90 bucks. You've made 24% profit on your options. She moves down to $89. You've made 34% on your options contract. Let's go ahead and really just showcase what we have here for you with Trade 1348. Currently, try for 5 years. Code Print City, and you could cancel anytime. Here is where you're going to get access to our alerts on both the 1 minute, the 4 hour, and the daily. And here we have our 4 hour alerts. We could see it's alerting every 4 hours. We also do have the 3 and a 5 minute currently in beta, which we look to be introducing to the broader community within the next 2 weeks. So for those who are just day traders or intraday traders, we have a solution for you as well. And I'll highlight this in a second. Also, once you sign up, you will gain access to this chart. And as you can see with AMD, for those who like to scalp, these traffic light alerts and indications are absolutely brutal. That's a $1.26 move. This is an 82-cent move. Now levered with options means you've made a lot of money. Now going back to this calculator here, you're able to see how long optimally you can sit in the trade before you start entering the negative. I'll include this link down in the description, but I'm also going to give you guys a gauge of expectation here. And in order for that to happen, we need to go to the daily with AMD, and we need something called the ATR indicator. And the ATR indicator is telling us that on a daily basis, AMD can move in a range of at or about $3.48. Now, assuming that 60% of that move is in your favor, then obviously buying a long-term contract as AMD comes down, we have a level here at $88. This is your 48 EMA, which also coincides with this level at $88.94. And again, this is all drawn out for you once you sign up into the community. Furthermore, we have the 200 EMA at $83.19. And it wasn't too long ago where AMD was trading inside the 200 EMA. So this is a high probability setup. However, where is my risk in this trade? And I'll show you guys a great example of where risk might be. Now, should you have entered this traffic light here and you came all the way down and you were saying, okay, she's going to keep going down more. Well, we have this aligned for you. This is the 24 EMA. And our argument is once we see a candle break above this level, it is time to close your position because this will inevitably lead to a market shift. And this can be applied to any time frame. Let's show you on the 3-minute here. As you can see, we have an alert here that comes to a level. And then once you get a break of the 24, we have a shift in momentum. Okay. So there's more to be taught with this strategy, but the point of this is to risk less, understand your trend on larger time frames, and then play further out of the money, whether it be realistic or because what's happening here is, let's say you even bought a $70 contract, and I'm just going to show you guys what this looks like. Okay, so let's get back to this here and let's change our strike. We're going to select the strike at $80. So that's 22 cents here. We're going to calculate. And as you can see, as long as you are guessing the direction right, over time, should AMD come all the way down to $83 by April 22nd, that would be a 277% return. Obviously, this is all scalable, and you do have an opportunity to make a ridiculous amount of money, an absolute ridiculous amount of money. It's all about patience, boys and girls, and make sure you go ahead and check out Trade 1348. Again, get your first month for $5 using promo code Print City, and I will see you in the next one. Boys and girls, make sure you get this chart. In fact, I will be giving away this free chart for you, and this link will also be included in the description. But in this chart, you are still getting call and put signals, right? And I would challenge you to put the strategy to the test. No, we do not have the 24 EMA. Of course, we have to create incentive for you to join the community for just $5. But once in the community, you will have a solid understanding of a rule-based system. And now this additional strategy that minimizes your risk and helps you to curb emotional bias to help you make more money than you've ever dreamed. Anyways, this is Gabe. I'm signing out. Peace.